Hello everyone, a very good morning, good afternoon, and good evening to all of my viewers across the world. This is your host Vaibhav, and in today's session of JForex Indicators Explained, I will be explaining to you one indicator based on the moving average. But this is more often volatility indicator. We can also utilize this indicator for determining the trend, and along with that, we also get a good idea of the volatility in the underlying instrument. The indicator is called Keltner Channel. This is derived using the exponential moving average and the ATR. So we get a idea of the trend. If the momentum is bullish, then we will have a rising channel. If the momentum is bearish, we will have a downward sloping channel. If the underlying instrument is not really going anywhere and it is trading in a narrow range in a sideways manner, then more or less we will have a flat channel with a reduced band of the ATR, which we utilize to arrive at the upper band and the lower band of this channel. So let us now head to the JForex platform, which has been developed by the Dukascopy Bank SA to make trading experience which not many would like to forget, and not once we start trading we don't really stop unless we become successful, or in some cases unless the account blows out, but that shouldn't really happen, and that's why I am trying to explain to you various indicators involved which we can utilize to make sure that we make money, not lose money. So that's the purpose of this series. So let us now consider this indicator which you can find listed amongst the overlap studies, and else you can simply do a quick search, and if you type in its name, the indicator will appear, not magically, simply naturally. So here it is, Keltner Channel. Alright, so let us do another method. Let us try. So I type in Keltner, and here it is. These are two indicators. In next session I will be dealing with these Keltner bands. This time we consider the channel. Alright, so this is the Euro USD chart with the hourly candle period, and I have plotted this Keltner channel with the default setup. So the calculation period is 10, that means 10 hours worth of data is being used to arrive at these values, these plotting of the Keltner channel. And as I said, this middle band is mostly EMA. You can sometimes use another moving average, but we don't really have that choice given to us on the platform. So we have to work with the default setup, and the default setup contains the EMA, and then certain ratio is used. It can be 1, it can be 2, it can be 1.5 to multiply the ATR of the given candle period of the same period, for the period for which is also utilized to calculate the EMA. So we use the same candle period for calculating the ATR, and then we add to arrive at this channel up, and we subtract that same value from this EMA to arrive at this channel low. So we get the upper band and the lower band using the EMA and the ATR values. So we get a good idea of the volatility and the trend. Here, as you can observe, when the volatility is quite less, when the underlying instrument is moving in a narrow range, we have this formation where the EMA is now sloping mostly sideways, and these bands have also contracted and converging close to this price action data. And if you consider this instance, we had this sharp move on the higher side, so we had expansion of salt happening in these Keltner channels because the volatility increased, resulting in the increase of the ATR. So we had these bands expanding further with the middle channel, the middle line of the EMA also starting to climb up. So inclination started to go up. So that's how this whole setup works. And now if we go back in time, we had many instances where the underlying instrument, in this case the Euro USD, traded in a narrow range. So on those instances we will find this channel is mostly sideways, and on some occasions where we had this sharp move but the price doesn't really go up, the EMA continues to move sideways, but these bands expand compared to the prior output. So we had these formations which are giving us a good idea of what kind of system, what kind of strategy we can devise using these channel. And I feel that we can utilize the trend as well as the volatility at the same time, and we can use these channel bands as dynamic resistance and support area. Suppose the price rise is happening, suppose the middle band is the upward sloping, not downward sloping. First, we will consider the bullish formation. So, if the middle band, which is the EMA basically, is upward sloping and we have these channel on the rise, then I think we can keep looking to go for the buy trade as and when we have some sort of correction and the price dips closer to these lower band, and if the price action remains strong even after consolidation, we can expect the momentum to pick up again. So in that case we can indeed expect to profit. So we can keep looking for buying opportunity if this channel formation is showing the bullish tendency. If the underlying instrument is moving in a bearish manner, then I think it is better to keep trading with the trend. And if the EMA, the middle channel of the Keltner channel, is downward sloping, then it is better to look for short sale trade. So in this case, we can try to go for the short sale trade, but of course the optimum entry has to be figured out. So there are two ways we can use this upper band as a entry point when we have these downward sloping formation, and we can use these lower band for the buy trade when we have these upward sloping formation. In these two occasions, as we are observing, we don't really have any significant continuation of the momentum. If we had gone for the sell trade here, we first have some move on the higher side of around 30 pips, then we get this move on the lower side of around 40 pips, and in this instance we have first move after buying closer to this lower band of around 30 pips, and then this decline pushes the Euro USD to change the direction. But then this is the formation based on the lower time frame of the 10 hours. If we increase the calculation period to say 50, we will have the trend determined using much more data. So that trend is likely to be much more sustainable. Now, here you can see that the trend doesn't really change that fast. We have this formation where the change remains on one side for significant amount of time, and then eventually the changes do happen, but that takes time. So responsiveness is a lot lower, and we can consider this formation to be a lot more reliable. So the basic premise remains the same. We continue to trade on the inclination side. If the inclination of the middle channel of this Keltner channel is in declining formation, then we continue to look for the sell trade closer to these upper band. And if the formation is showing bullish tendency, if the underlying instrument is on the rise, then we continue to look for buying opportunity closer to this lower channel. And even if the trend doesn't really sustain and we get a reversal from those prices, most of the case what happens is that first the underlying instrument goes in a consolidation phase. So suppose if the momentum has been bullish, it is not really going to crack and change the direction suddenly. Most of the time, not always, of course, there can be some sudden sharp moves where the bullish trend then reverses back to the bearish trend. So that can also happen, but I'm speaking about in terms of probability. So the probability is quite good that the bullish trend might continue or it might go sideways. So in both these circumstances, we can make money if we are buying closer to the support zone in the bullish trending environment, and in the bearish tendency we can we can stand to profit if we sell closer to the resistance zone. And in that scenario, either the underlying instrument will continue to move in the bearish formation, or even if it is going to change course and turn bullish, in that case it is likely to go for some consolidation prior to the reversal. And in that case we can even make money if not lose money. So the formation is likely to give us opportunities on both sides, the buy as well as sell trade. All we have to do is customize it as per our requirement and consider some peculiarities of it. So when the underlying instrument doesn't really go up and it forms a range, it might be wide, it might be narrow, and it continues to move within that range. In that case, we will have this kind of instances where the support and the resistance system doesn't really hold. We have these sharp moves first below the support area, then above the resistance zone, then again below the support area. So if we consider this as a representative sample, then you will say that this support resistance system doesn't really work. But that's not the case. We have to keep these kind of possibilities in mind and figure out the ways to mitigate these things when these things do happen. And believe me, these things happen with almost all the indicators. So every indicator has some systemic flaws, and those can't really be done away with unless you really want to give up on that indicator. So we have to know which are the flaws and then try some mitigation measures, some corrective corrective formations which will help us tide over these deficiencies of that particular indicator. So in that case we can reliably use this formation of the Keltner channel, so we get a good idea of the strength of the trend. If the bands are quite wide and in a steep decline, then that can be considered as a strong bearish trend. But if the bands are not that wide, if the bands are contracting, that we can say that the underlying instrument is losing steam and it is not really in a strong trend. And vice versa, conditions can be considered for the buy side trade, the bullish formation. So this is the classical use of this Keltner channel. Of course, you can figure out various possibilities, and there are always more possibilities than I can list here. So you have to figure out some uses which you feel are likely to help you tide over these deficiencies of the indicator, and also you will get a good system to work with. You will have higher probability of making money than losing money, and that is always our purpose. So all we have to do is rely on these system and then customize it as per our requirement. So now let us look into the customization options given to us. If we consider the calculation period, we don't really have much of a choice here. We can simply alter these calculation period. If you want to work with a larger trend, then you will have to use a calculation period which is going to take into consideration large numbers of candle candle periods. And if you want the formation to be a lot more responsive, then all you have to do is reduce and maybe restore it back to the default setup of 10 hours, where we have a lot more responsiveness and of course a lot more fluctuations. We will have these zigzag moves where the underlying instrument will sometimes sharply move on the higher side, then sharply move again on the lower side. So in those circumstances we will have these fluctuations taking shape in the Keltner channel also. All right, so now we keep this default value at 10 and we consider the output combination. If you want to make it look more aesthetic, you can tinker around with the color combination. Let us try out a customized color combination. So I like to make it a bit green. All right, so I have made it parrot green. Again, we go to a custom combination. Alright, so I got this greenish combination, but these two greens are a bit different. It's not exactly the same. Let us make it more stylish. So I got this style change from a flat line to a stylish line. Then I got this Keltner Channel middle band, and here also I am making it a bit brighter. Style also we are going to change, and I am going to increase its width and reduce its transparency. As we are going to focus more on the bands, we will keep the transparency of this middle band low. Then let us come to this, and since the chart is looking too black, I will brighten up it to some extent by using the white line as our lower band. And so we have this combination, and of course I feel, at least if not you, that this combination is looking a bit more attractive, but you can say the chart is also looking a bit more cluttered. But then that is because I have increased the width of these lower band, middle band, and upper band. If you want to make it less cluttered, all you have to do is decrease the width, and also you can reduce the transparency. So that is always the option. All right. So I am just giving you an idea of what can be done with this kind of setup. Okay. Now let us try out some other options given to us. We have these advanced calculation options. If you want the output value to be constant for whole candle period, then you have to opt for this check here. If you opt for this, then the recalculation will be done only once when the new candle formation takes shape, and then it will remain constant for the whole of that candle period. Otherwise, the value will